Money, a simple idea that seems ordinary today, yet it has shaped the entire journey of the United States. People swipe credit cards, buy coffee, pay mortgages, transfer money online, everything feels normal. But behind this normal routine, there is a powerful story of survival, trust, innovation, and ambition. A story that helped America grow from scattered colonies into the world's largest financial powerhouse. When early settlers arrived in America, there was no dollar, no banks, no national financial system. People depended on nature and their own skills. Farmers grew crops, hunters traded furs, fishermen exchanged salt and fish. Barter was the first version of trade, but it worked only when both sides wanted exactly what the other had. As the colonies expanded, needs became more complex, and barter became slow and inconvenient. That is when Americans turned to commodity money. In Virginia, tobacco acted like currency. In Pennsylvania, grain was exchanged. Along the coast, wampum shells were used. These items worked for a while, but they were far from perfect. Crops spoiled, shells were not accepted everywhere, and moving these items from one place to another was difficult. America needed something reliable, something stable, something that could support a growing nation. Gold and silver coins became the answer. They were durable, easy to carry, and respected across the world. Trade became faster, merchants felt safer, and the early American economy began to rise. But carrying gold on long journeys was dangerous. Traveling across frontier lands with valuable metal meant facing theft and risk at every step. This problem triggered one of the biggest financial innovations in American history. Goldsmiths and merchants started offering safe storage for gold. People deposited their gold with them and received a paper receipt, a promise that the gold was safely stored. Over time, these receipts began to circulate as money because they were lighter, safer, and easier to use than gold. People trusted the paper because it represented real value. These simple receipts slowly evolved into the earliest forms of American paper money. After independence, the young nation faced another challenge. Every state had different types of money, different coins, different notes, different values. Trade was confusing and unstable. The U.S. government eventually created one unified currency, the dollar. And the dollar became more than just paper, it became a symbol of trust, stability, and national identity. Modern American banking works very differently than most people imagine. Many think banks simply store deposits and give loans. But the real system is the fractional reserve model. If someone deposits $1,000 in the bank keeps only a small part and lends out the rest. The depositor still sees $1,000 in their account, and the borrower sees the loan amount in theirs. This doesn't create fake money, it creates credit, which is the fuel of the American economy. The borrower spends the loan on groceries, repairs, a laptop, or a car payment. That money lands in someone else's account, and the bank again lends a portion of it. This cycle repeats all across the country, allowing one deposit to support multiple transactions. That's how businesses grow, jobs are created, homes are built, and innovation continues. At the center of this system stands one institution, the Federal Reserve. The Fed controls interest rates, fights inflation, regulates banks, and stabilizes financial markets. During the 2008 crisis and the 2020 COVID lockdowns, the Federal Reserve injected massive support into the economy, preventing collapse. America's financial system doesn't run on money alone, it runs on confidence. Most people don't understand the difference between currency and money. Currency is what you use daily, cash, debit cards, and digital payments. Money is what builds your future, real estate, stocks, bonds, gold, retirement accounts. Currency keeps you alive today. Money protects you tomorrow. That's why Americans focus on financial planning, savings, investments, diversified portfolios, emergency funds, and long-term assets. The COVID-19 pandemic proved how important financial knowledge is. People who understood credit, savings, and investment handled the crisis better. Those who didn't found it much harder to survive. In the end, the entire American financial system stands on one foundation: trust. Trust in the dollar, trust in banks, trust in government institutions, and trust in each other. When trust is strong, America grows. When trust shakes, markets fall. But knowledge, discipline, and smart decision-making help people stay strong through every economic storm. Money is a tool, powerful, flexible, and full of opportunity. But its real strength appears only when you understand it. The American dream is not built on luck. It is built on learning, effort, planning, and the smart use of money.